It's called operation expenses.
Operating expenses, yeah.
Okay. Can continue, sir.
Okay, same procedure. We go and we look at the expenses. Remember in the exam, like, sometimes the way they ask you in the exam, they can give you the nominal, that is easy if they give you in that way, where they give you the nominal account section and the balance sheet section. I think if they can give it to you that way, it's going to help you a lot. So I just brought this question here because here they didn't tell you, but I just want to challenge you. But in the exam, it can be very simple. You know that for you to find incomes and expenses, you must only look at under nominal account section. Okay, I think you know that.
Yes, sir.
Yes. So let's go check the expenses. Firstly, would you see an expense here?
Yes, advertising.
Advertising, no problem. You said advertising. Let me just write it here. Advertising. Any information about advertising? Let's go back, then check any advertising information here. Adjustment. I don't see any.
No.
But what can you expect? Because I want you to expect things. Remember, this is just a lesson. So in the exam, what do you think can be possible? What can we expect on the advertising? There are two things that can happen, or two or three things. The advertising can either be accrued or prepaid. So you must expect those things.
Okay.
Did you hear what I said?
Yes,
So
sir. Advertising.
in a nutshell, all expenses, what I expect from them, they can either be prepaid or accrued. If I've got accrued expense, I will add it. If I've got prepaid expense, I will less it. Are you with me? So you
Yes,
must
sir.
just check which one is accrued and which one is prepaid. So prepaid meaning, again, is the same as the income received in advance under incomes. Prepaid is like you paid for next year. You take it out for now. Accrued, it means the amount for this year is incomplete. So you must make it complete. I don't know if it makes sense.
Yes, sir. So you're adding for
So for
accrued.
yes, we add for accrueds. But I don't think we have anything here. We're just gonna put how much is advertising?
I didn't see the amount, sir. Okay,
Don't you have a copy
2,000.
with you there?
It's in another slide, sir. Sorry.
Okay. So it's 18,000. What other expense? Do you see?
Salaries and wages.
Salaries and wages here.
96,000.
Remember, we must also check what are the possibilities, if I may ask.
If it could be prepaid or accrued.
Yes, it can be prepaid or accrued. Let's see.
Information.
Before information here, any salary information related here?
Yes.
Okay.
It was
They
incorrectly
say
included
2,000.
an amount to
Ne?
2,000.
So this amount is a loan to, so they made a mistake by recording. The amount will be repaid. So in other words, they just made a mistake. So the mistake, we have to decide whether to add it or less it. What do you think about this mistake?
So it was received.
No, I'm not receiving. We're paying salaries here. So check the salaries. How incorrect is it, so that it can show. If you can know how is it incorrect, you will be able to rectify it by either adding or lessing. Check the error and check how can we rectify the error.
It includes an amount of 2,000.
Yes. And then?
So we're gonna minus it, we're gonna less it.
Perfect. I'm gonna say 96. The challenge is to deal with the situation as it comes. Can you see now?
Yes.
We were expecting a code or prepaid, but all of a sudden, what are they doing? They're giving us an error. So the error, you just have to check the error and check how can you rectify it. You can't learn errors, you know what I mean? You must just know, okay, this is the error. How can I rectify it? So it was me. The 2,000 was included by mistake here. That's how we have to less it. Okay. Don't know if you are still there or not.
I'm still here, sir. Sorry.
No problem.
Writing.
No problem.
Insurance will be another expense.
Insurance is another expense. Thank you. 4.5. In adjustment.
Yes, at the end of the current financial year, 500 was owing on insurance premiums.
Okay, what do you call this? For expenses, you must expect two things. Please tell me, what do you expect here?
Prepaid. Wait, sir. I'm confused. So when you're owing,
it's accrued, it's outstanding. In other words, the amount is incomplete in the books, you are owing it. It's outstanding. So if you say prepaid, it means this amount was paid for next year. Do you see anything to do with next year here?
No, sir.
We didn't pay in advance. You can only say prepaid when you pay in advance. When they say owing, outstanding, in areas still to be paid, this means accrued. To accrue is to owe. If something is accruing, it's you are owing. I don't know if it makes sense.
I understand, sir. It makes sense, sir.
Okay, 4.5 insurance. 4.5. Must I add or less that 500?
You must add it.
Must add it.
I'm with you, sir.
Okay. Next expense here. Do you see any expense here?
Inventory.
Sure. I'm disappointed.
Oh, no, sorry, it's not. Sorry, it's not. Yeah, there's no more, sir.
There is. Check all the balances, all the accounts.
Cleaning materials.
Perfect. This one.
Of 10,000.
Any cleaning material here?
Yes, cleaning materials with 3,000 on hand. 31st December.
Yes.
So it's the current year.
So, yeah, but are we going to add or less?
Sorry, so can you please go to the question?
I'm saying, are we going to add this amount or less this amount on hand?
So I'm not sure. Wait, so on a hand, would it be like you still have it?
Yes, it's the one that you are left with.
So you will add it.
Now, yeah. Now, let me tell you something. This exercise a bit. If they just said, can you see here? They just said, they said expensed. Can you see here?
Okay.
Expensed.
Yes.
This makes the difference, meaning this is the amount that we need. Remember, in the statement of profit and loss, we only need expenses. So it means they did calculate the expense for us. Can you see now?
Okay.
So
Yes.
if they just wrote cleaning material only, meaning we were supposed to find the expensed one by taking the cleaning material at the beginning and minusing the one at the end. On hand, we always minus it. So I was supposed to take the amount here, 10,000,
Minus.
and I was supposed to minus 3,000 to find what? The
Expense.
expense. But with the fact that they said expense, it means they gave us the expense that we are looking for already. I don't know if it makes sense.
Yes, sir.
Yes. Here we only need expenses for the material. So in future, it's very rare to find this. So in future, if they just set cleaning material only and they say on hand, you just have to take the one from the balance and you minus the one on hand from the adjustment. Will you remember?
Yes, sir. Can I just quickly write that down? Okay, sir. I'm with you.
Yes. So the only thing that changed the whole thing is the expense. So next time they'll say cleaning material, you will say 10,000 minus that amount. But if they say, it's very rare to find these expense things, just wanted to confuse you, okay? But I think 90% of the chance you'll find it as cleaning material. What will you do? You will say 10,000 minus what? 3,000.
3,000.
Yes. And we call this on hand here. We call it, I don't know if you have seen it before, we call it consumable stores on hand. Why must you know these things? Because if they ask you for the notes, these things will affect you on under the notes. So you must know these things so that you can be. So next time they can maybe give you stationery on hand. Same treatment. It's still gonna be consumable stores on hand. So if it was stationery, you will take stationery and you minus this one. So you always minus on hand. So you treat on hand like prepaid expenses. You know what I mean?
Yes, sir.
Yes. Remember, we're still looking for expenses, ne? Any other expense here?
No, sir.
No. But after that, you must look here. Sometimes you can find that there's an expense here, but it's not there. Let's look at the expense.
Okay.
Can you see the importance of highlighting what you have used? So now we know that this one highlighted. Highlight. Okay, this one, we have used it, remember already, as an interest, remember? But don't you see any expense here? Let me ask you, maybe you can see an expense.
The depreciation of the year.
Perfect. Okay. But remember, next time they can give it to you as an adjustment with the percentage, you will know how to depreciate, okay?
Yes, sir.
If they say straight line method, you know what to do. If they say diminish, you know the difference between the two, okay? I trust you. Will you remember how
Yes,
to
sir.
calculate?
I have no choice.
No, you're not convincing me. That your answer is not convincing
No,
me.
sir, I have no choice. I need to remember.
Yes. Okay. You must know how to remember. And please, you must show calculations because they mark calculations. Is 4,000. This one is given to us, of which I don't like it if they give it to us. I want us to, if let's say they say 10%, you know, we've been under the previous question, we've been calculating what? Difficult depreciations. I think the one that can challenge you is when they say diminishing, because you must take the cost and you minus accumulated. But if they say straight line method, you just have to take the balance of the cost there and you multiply by the percentage and the number of months. That's all. No problem. So we have done that one. So what else do you think we have? The inventory. This is inventory, this one. On hand. What do you think? Can we record this one?
No, because it's still the current year.
No, you are correct, but that's not the reason. Inventory is an asset, it's not an income or expense. Here we need only incomes and expenses here.
Yes.
So that's why there is no inventory here. Okay. So now we need to add all the expenses, and then we'll find the total of expenses. So we must add all the expenses there.
The amount is 131,131,000.
Thousand like that, ne? Sorry, must write it there. Must go there. But in brackets, okay? Because an expense. Don't forget. Because we less them, okay?
Yes, sir.
And after we less them, you take this one up there and you less that one in brackets there. So we take this one, we minus this one. And then we get something called profit before interest expense, but sometimes they call it profit before finance cost.
The amount is 86,600.
Sorry, how much once again?
86,600.
6,000?
86,600.
Okay. Okay, thank you very much. Positive, ne?
Yes, sir, it's positive.
Perfect. So we made profit before finance cost. Remember, finance cost is the same as the interest expense. Okay?
Yes, sir.
Now, before we can move further, unless if you've got a question, I want us to talk about the other expense that they usually have. Have you ever had something called allowances for credit losses?
No, sir.
That adjustment, in most cases it confuses many students. So there's something called allowances for credit losses. And what do we mean by say allowances to for credit losses is when, for example, if you are running a business, sometimes you need to put money aside for people who can decide to disappear with your money. I don't know if you understand what I mean.
No, I got you, sir.
You got me. When you say you got me, you understand me? Or can I stop explaining?
Yes, I understand you.
So you understand what is allowances for credit losses?
Yes, sir, I understand you.
Will you be able to deal with it when you see it? Because I was in the process of explaining, you said you understand, you stopped me. So it means you can be able to deal with it when you see it. Because I was expanding my explanation. I'm trying to be harsh because the time is coming. Let's talk about it because I can see it's like you want me to just finish. I want you to understand what I'm talking about. There's another expense called, let me write it down here. Allowances for credit losses. Ne? So the allowances for credit losses. So the allowances for credit losses is like you put money aside. For possible bad debts, because people can decide to disappear. Can you see now? Are you with me?
Yes, sir.
Now, sometimes it depends. Sometimes you can have it. Let's say they can give allowances as a balance here, but I'm going to tell you about the allowance. Can you see now? Let's say, for example, okay, let's talk about a situation where we don't have allowance at all. Let's say they say you must create. So if they say you must create allowance, it means you are creating it for the first time. And automatically that creation will be an expense to you. I don't know if you are with me or not.
Yes, because it's for bad debts.
Yes. And then when you create it, the two accounts will always be, it's going to be an expense, and the two accounts, this expense will be called allowances for credit losses adjustment. So it means you created, ne? In other words, it was 0, now you are creating it. In other words, if it was 0 and now you credit for 5,000, in other words, now it becomes what? 5,000. You adjusted from 0 to 5,000. I don't know if it makes sense. Let me just write it down. Even though they won't, if you are creating, they won't give you a balance. But I'm just saying, for example, if you didn't have it at all and you see the word create and they say you must create 5,000. So it means now the balance will be how much? The balance will be 5,000. So you adjusted 0 to 5,000. You understand what I mean?
Yes, sir.
And this will always be an expense. So in this case, if they said we should create, the word create makes the difference. I was supposed to come here under expenses here. I'm just going to write it for the sake of explanation. I was supposed to have something called allowances for credit losses adjustment. Don't forget the word adjustment, because if you don't put the word adjustment, it doesn't qualify anymore. So it means it was supposed to be part. If it was 5,000, the way I put it there, you were supposed to put 5,000 here. Are you with me? Under
Yes, sir.
expenses. Only when they say create. But if they say adjust, because they can say adjust. If they say adjust, it's going to be a different story.
Okay.
So if they say adjust, for example, here, it will mean, for example, here they can give you how much?
5,000.
They can give you, let's say, 1,000. Ne? It's a balance. Okay. They can't say adjust without giving the balance. It means to adjust is to change. Let's say they want you to change this 1,000. They say adjust to 7,000. Meaning from now on, these allowances must be how much? 7,000. So how much do you think will be the adjustment?
6,000.
6,000. Can you see now? So the 6,000 is the one that will be the adjustment that is going to go to the statement of profit and loss. Will that make sense?
Yes, sir.
This will be an expense that I'm talking about, because you're adjusting from an amount. But if you say create, automatically it becomes the whole amount that they're talking about, because it was 0 before. The whole amount will be. I don't know if it makes sense or not.
Yes, sir.
But again, sometimes they can say adjust. But if your adjustment, well, adjusting is not all about increasing. Let's say now the adjustment was 200.
Yes.
Let's say it was 200. So it meaning the adjustment here won't be 6,000. The adjustment is always the difference. That adjustment will be what?
800.
But this adjustment is not an increase, it's a decrease. Can you see now?
Yes, sir.
And this decrease will be part of the incomes. In other words, it won't be an expense anymore.
So if it's an increase, it will be an expense.
Always.
Okay.
If it's a decrease, it will be an income. It will be under other incomes. But you are still going to write it as allowances for credit losses adjustment. But instead of putting it under expenses here, you were supposed to come and put it under what? Other incomes there. Yes. But when they say create, don't worry. It will always come to what? To the expenses. I think you'll remember that. I'm just saying what if, okay? I think the challenge for you is just maybe try to interpret the question and check if you can be able to do this or not. Because you will never know how will the question look like. Deal with the situation as you see them. Okay.
Yes, sir. I'm with you.
Okay, now let's go and take it a little bit further. So now we are going to talk about